Hi everyone. Today is Monday, 6:21 p.m. Pacific time. So I want to talk about today about some of these stock trading and option trading videos that I'm creating. But always the question is that which stocks are good to trade, right? Whether it's a stock trading or option trading, is always comes to the mind that can I just use any stock and start doing option trading, or how do I choose a good stock to do option trading, right? So one thing that I follow, and I don't I'm not a financial advisor, so I don't want to give an advice or specific instructions or follow me or anything like that. But the way I do research, the things that I follow, I just want to share is that I don't change my stock picking whether I'm doing stock trading or option trading. Option trading tend to be a shorter period of time, has a either it's not really about investing in a stock and selling stock, but it's also looking at a lot of the market movements and premium changes, and combining call and put in many different ways to make money. But stock trading is simply buy stock or sell stock and you make the difference as a profit. But one thing I don't change, the way I'm trading stock, which company I'm choosing to stock trading or option trading, right? So it's very important to only trade the companies that you understand their business, you have a good research on their company, that industry, or you have a very good conviction on those stocks, right? Then only you invest on this stock. So one of the things that I follow is that the can slim method. The can slim method is founded by William O'Neill, who founded the Investor Business Daily. Now whoever into the stock market knows that Investor Business Daily has services that they provide to retail investors, and they have a lot of websites and a lot of trading platforms and all those things. But overall, William O'Neill founded Investor Business Daily, and he also founded this can slim method, which is pretty cool. Why I'm saying that? Because it kind of resonates with the way I value different companies, and the way all the big names in the stock investing for ages, right? Warren Buffett, or it's in any other big investors have been talking about, which is like how to find the business health of the company, which company is going to stay long, stay strong, and make continuous money, right? So those are the companies that need to be invested. And canceling method is actually taking all the acronyms of CANSLIM, and I'm just going to go over and how those things need to be seen when you choose a company to make stock. Because the thing is that in stock trading and option trading, you can never be able to 100% be accurate into making predictions of market trends and the stock trends, right? For example, as I said before, option trading and stock trading, you have to be accurate in those two areas, right? You have to be close to accurate, actually directionally right, that is this market bullish or bearish? Is this stock bullish or bearish, right? It could be like market is bull, but a lot of other industries going well, but the some stocks is not doing good. It's not participating in the bull market, or it's not participating in the bear market, right? So those things are very important. So the canceling method is talks about like some of the feature that of the company that need to be validated before investment is done. One of the things starts with C, which is like a current earning, right? So current quarter earning, which is short term earning. It is important because we need to see the how the company is exactly doing right now, right? Whatever market condition is right now, whatever macroeconomic condition is right now, how the company is doing, performing this time. Now this current earning, which is the last quarter earning or the upcoming earning, you need to be paying attention to and make sure that company is making good progress. Now, situation can have that the macroeconomic situation is bad. We are going through a recessions or some kind of an um, scaling back on the overbought market and all those things. So those can happen, but at least the company should be staying strong. So it should be showing that strength in the current earning report. So you have to see their earning result. You have to see that how many new customers it added, how many, if it's subscription based like Netflix. You have to see how many subscription is increased. How much is customer is loving their product and services. So, and how much money that they are making, right? What is the the EPS, the earning per share, what is their total cash flow increased, what is their revenue increase, or the margin, operating margin increase, and all that, right? So the company should show you a continuous growth. So their earning growth, their sales growth, their product, the reaching out to the customer base, diversifications, and all those things. So you need to see in the current earning report and go through all the details, and we'll see how this company is performing based on the current quarter. The second is the annual. So A for annual earnings. So you have to see not just current quarter, but over a year, right? So, take the last quarter, go back 1 year, look at their annual earning, look at their quarter by quarter earnings. So at least 4 quarter, 5 quarter, you have to go a little bit on the past and see how companies continuously doing, right? So yearly earnings should see like 20% or 25% increase year by year. Like current earnings should be also seeing something like 20% increase. So current earning is growing 20%, annual earning is growing 15, 20, 25%. So company is in a growth path, right? This company is growing, company is making a lot of money, customer is, more and more customer is buying their product or buying their services. This is good. This is good things to show that company is in the right path, right? And then N stands for new products, or could be new services, right? So continuously innovate, continuously bring new product, continuously find ways to make more money, not sticking to one product. Like you have seen that how company kind of like grow from one product and continuously make new product to sell, and new customer to reach, or new market to capture, and all that, right? So a good example was, right, innovation was like Netflix is to say send that red envelope DVDs. As soon as this new technology came up, internet came, streaming became possible. I mean, they immediately jumped onto streaming business. And I used to remember that I used to have a Blockbuster DVD sent to my home, or I would go to Blockbuster store. And I also had same time Netflix. So I used to get 1 week Blockbuster, 1 week Netflix DVDs, and used to go to store. Mostly I used to go to Blockbuster store because they used to have more collections, but they focused on the store, hardware store, brick and mortar, but they didn't really propel their business into streaming business. But Netflix knew that the internet going to be huge, and streaming is going to be the one that customer wants to leverage for watching movies, or watching shows or whatever. And they kind of innovated fast, and they spend a lot of money on technology, and they thrived, right? So now the story. Netflix become a phenomenal success, and Blockbuster is gone, right? So those things are very important to see, that how this company is bringing new product, new services, bringing new business to the market, and all that. Like one example of Mercado Libre. Mercado Libre is online shopping for Latin Americas, but they also now into a payment system. So they become a PayPal for Latam, and then they're kind of continuously diversifying into new market. And we saw Amazon started with selling books, but now it's a marketplace for everything and anything in the world, right? So this is amazing stories of how company can bring new products and services quick, and learn from their past, and continue to thrive in the future, right? A scarcity is kind of like a moat, which is really a competitive advantage that company should create, so that kind of create a barrier that their business cannot be disrupted or cannot be overtaken by some other competitors, right? So kind of like a competitive distinctions between your product versus other product. Look at Apple, right? There are a lot of cell phone companies in the world, and Google is making cell phone. Amazon Fire cell phone and tablet and whatnot. Microsoft was selling Windows cell phones. I mean, nobody could stand against Apple, right? So Apple created a product that loved by the people, that created status symbol. Nowadays, iPhone is equal to like some kind of good taste, good having good things in your hand and all that, right? So they created this competitive advantage, right? So similarly, a lot of I'm more familiar with the tech world, so I give a lot of example from the tech industries. So I see a lot of cybersecurity companies coming and going, but some of the companies like CrowdStrike, Zscalers, they are standing up. Fortinet, they're standing up, but Palo Alto Network, they're standing up. But there are other companies that SentinelOne or a lot of companies comes and goes. Nobody really get to know their name even, and even though they're successful, they can't continue because they lose their competitive advantages, they lose their moat. And moat is this continuous create harder for other company to really compete with you. And that's very important, right? So basically you are creating a scarcity of supply and demand. So if this is like Apple phone is cheap and everybody can afford it, I mean, then the moat is gone. Apple will not be able to make that much of huge margin by selling expensive cell phones, right? So laggard. And so this is the term laggard doesn't make a lot of sense to me. The thing is that when is the right time to buy is also important. So even though it's a great company, but you need to really find out when is a best way to. So you don't want to buy high and sell low. You want to buy low and sell high. And of course, I mean, you can't really time the market, and I totally agree that timing market is almost near impossible. I don't know who can do that. Maybe Peter Lynch, I don't know. But they know Warren Buffett, Peter Lynch, they talks about not to try to time the market. Nobody can do that really well, and it's like impossible. And if you have a full-time day job, it's like I can't even think of doing that. But the thing is that this is called RSI. So this is an indicator called relative strength indicator, which kind of determines the market, how much the stock is bought or sold at the same time. So the good indicator is that 30 is 30 and below is kind of like, okay, the stock is oversold, means that there are a lot of supply in the market for this stock. Now it's really cheap, or price is low. So it could be a time to buy the stock. But that's so none of this single indicator is the only indicator to decide to buy the stock or option or do stock trading, right? These all need to be combined. So you will start with earning, you will see the moat, a competitive advantage, continuous innovations in product and services, getting new customers, diversifying in new market. But at the same time, you will see that it's the right time of all these things checked out. Okay, now should I buy now or should I wait? So if you see that it's oversold categories, RSI is below 30, and stock in upward trend, means the stock is doing good, the market is doing good, maybe this is the time. Because if you don't want to buy the stock when everything is falling down, because you don't want to catch the falling knife, because you don't know how below the stock can go, what can happen in the market. So market is doing good, it's bullish, it's going upward. Now it's it's time to buy the stock, but buy early so that it's not overbought, which is RSI 70 and above. So you don't want to buy the stock when RSI is 70 and towards 100. You want to buy even 30 and below, because 70 and 100 means it's overbought. Now there is a pressure to sell. So whoever made a lot of money on the stock can try to sell that, and that will create a lot of supply, and then price can go down. So you don't want to buy at that time. You need to buy when the stock is oversold. So yeah, so keep that in mind, right? So also, like I stands for institutional sponsorship of the stock, which means institutes are buying. So basically we retail investors, like individual of us, does not have that much resource, knowledge, experience, folks to doing research on the stocks and the company that institute can afford. Like which institute is like, I'm talking about investment bankers or investment firm, or this big fund management companies like Fidelity, BlackRock, and all those things. They are buying stocks in bulk. They're spending billions and trillions of the dollar that they are managing and investing on companies. They hold like millions of stock of a company that they have a conviction on. They're using investors' money into their company, and they have a good record. So need to see that what are these big investment companies are buying. So you don't go against them. You want to follow them. I mean, that's a smart thing to do. So that's you understand that if the stock is getting heavily purchased by institute, probably good time that you should purchase that, because then in a way indirectly you are using their research and knowledge that they are spending to buy that stock or sell that stock or get out of its stock positions. You are using that knowledge on your own benefit, right? So very careful about that. Get any information that you are getting from any source that has institutional purchase alerts or something like that, right? AIM stands for market directions. As I said, before also, right? The bullish market or the bearish market. You don't want to spend a lot of money or make open a big positions when the market is bearish, because you don't know how and when this bear trend will go down. So market is always like going through a cycle of bear and bull. So market is always going down or going up. So make sure that you find the right sweet spot where market is done with the bear trend, bear cycle, and now started bullish cycle. But don't be so late that it's already bull and now it's going to start on the bear cycle. So stay alert on the market, look at the market trend, read all the proper journals and informations and all that. One thing that I can show you that is free and has a lot of good informations is the finance.yahoo.com. It has really good information to understand. First of all, this is my account and my page, and I see what I see in this, right? I go to the first homepage and I see that the S&P and Dow and Nasdaq and what they are doing, right? So Russell is like a small scale industries, but Nasdaq is like tech industries, mostly thousands tech companies, and Dow is like all the big companies that are oil, natural gas, or tech companies are the part of like Apple, Microsoft, part of Dow. Same as Exxon Mobil's and all that. S&P 500 is the top 500 accounts in the US, right? This is the best indicator of the market. So if you see that S&P and year to date, if you like really zoom this and you see that trend, like, wow, look at this, right? Ups and down, ups and down, ups and down, right? So, but you see overall trend, if I see that, what is my 200 moving average? So it's purple line. So you see the purple line, it's still 200-day average is kind of like a horizontal. So it's not really taking a bull cycle yet. But if you see that, the 50-day average and 20-day average is kind of like a upward trend. So in 50 and 20 days, a stock is having upward movement. And you can see from this chart also, like it's really going up, but 200-day average is kind of like a real flat, slightly upward, but, going forward, maybe it will go up. So make sure that, so this kind of gives me good idea of, like, how market is, how 500 best companies in US is doing, kind of like indicator of the market, right? And then I kind of like some of the company that I follow, right? So, and then I kind of like watch how they are doing. So I create a list of them and I kind of follow them. So I have Elite, which is like my name to give like, by the way, this Elite list, I'm maintaining that for a long time and I've been investing on them. Recently, Bank of America said like Magnificent 8. So you see that Magnificent 8 is exactly the 7 stock plus one more, I think, Netflix. But these are and Netflix was in my list, but I removed it because I don't see in a long term Netflix really can have that moat with the Prime. It's kind of hovering over their neck. But I do believe that Netflix is going to continue. It's going to be very big, good companies continue to find ways to make money, and content is fabulous. I've been Netflix customer like since ages, and I've never thought of their price increase or anything like that. So another thing that I was talking about, right? So the company that people loves don't want to do, no problem paying more to keep that service is one of the examples is Netflix, right? So Prime, Amazon Prime, right, has increased their yearly subscription fee, but people are not canceling Prime just because they become like from 60 to 120. Similarly, Netflix used to be like $5.99 to $6.99. I don't know. Now it's like $9.99, and there's like multiple screen. There are a lot of ways they're trying to make more money, but providing better service, providing good content, right? So that's a good thing, right? So I think Netflix is going to continue, but I think the age that Netflix had, like just solely market leader, that's already gone, right? I don't think Disney is quite close, but I think Prime, HBO Max, and other channels are coming up, and they're doing better also. So Netflix is not going to be only market leader in streaming world, right? So, but still be the best. And I really like Netflix, but I'm not invested in Netflix. But Apple, Amazon, Google, Facebook, which is Meta now, MS, which is Microsoft, and Nvidia and Tesla, right? And the reason that I all the tech companies and all the mega stock companies, because why? Because I am familiar with them, right? I know pretty much how Meta technology, investment is happening. What are the areas that they are looking at? What are the metaverse? Whether that's the device that they launch, Oculus. Similarly, Microsoft, I have good knowledge about Microsoft. Directions that they are heading towards, the history that they had, the diversifications and easily scale. The amount big company, but they're still very innovative, right? Apple, doesn't take me to say anything about that. Tesla, yeah, the world will be electric vehicle world, and we'll see that Tesla will be leading the market. Is Tesla going to be the only market player? No. We know that General Motors, Ford is coming with their product getting better and better every day. There will be few more, Mercedes-Benz or, whatever, like Volkswagen or some BMW. They all will be flooding this market, but Tesla is not going to be the sole champion of this field. But Tesla is obviously has age, and because of their supply chain, because of their early investment, because of their technology, and because of their network that they have built, which is kind of giving them a little bit more right now and going forward to have the market share. So I think they're still, I think over 50% of the market share continue, and they're globally present. Right, there's Gigafactory in Germany, Gigafactory in China, in Beijing, and all those sort of things. Recently announced in India, they're going to do something. So yeah, I mean, Tesla, that's why the Tesla. So, I don't want to have a lot of companies in my list and a lot of things that I want to invest, so that I cannot manage and cannot really track that CAN SLIM thing, like, their current earning, their annual earning, their new product launch, their, earning announcement, what they're saying, what market is saying about them. All of those things is very difficult if you have like hundreds of 200 of stocks, but 5, 10, 8, 20 stocks, I think good. That you can keep track, but this is all up to you. Like, have some value stocks like Oracle, Bank of America, and JPM. So I know bank is, over the period of time, bank tend to do well, and some of the banks have been doing great. For 5 or 10 years, last 5 and 10 years, not right now. Right now, bank is a little bit of in a water, but Bank of America, JPM are the two banks that I have conviction on. I also have a conviction on Goldman Sachs. So I think I have a Goldman Sachs is to very little investment on Goldman Sachs, because I like the bank. I know that they are doing good on the long-term deposits and all those things. So they have a lot of cash. Oracle is a technology company, but I put that in the value because it's really lost that fast, innovative company space, but it's kind of changing right now. So I think Oracle is doing good so far. So I could put that in elite, but I don't think so I'll do that. But I still think that company is going to grow fast enough than it has done in last decades, because of the cloud and all those things that they're investing on. So that's why it's in the stock. Okay, so, and then I have like a long-term growth. This is kind of like a second level from the elite class, which is like some of the stock that I think are short-term very good. As I said, I talked about Palo Alto Network, which is very good company. People like to use their product. They have more. They do things that data center security and endpoint protections, and their product of Prisma Cloud, which is like awesome product. A lot of company wants to use that. A lot of company wants to take advantage of this cybersecurity to protect their assets and data, which is good. Uber is going to be phenomenal company. It's been like, everywhere now. I think within Lyft and Uber will thrive because of their Uber Eats, and see the diversification, right? So they try cab service, human-driven car and all that. They will be looking into full self-driven car, where they will have a huge market share. They're already in the Uber Eats, so they're in the food delivery services. They might be having Uber Pay next. Who knows, right? So this is good. They're giving competition to DoorDash. Also, they're giving competition to other taxi services. So this is phenomenal how they can diversify and try to make business and more money. CrowdStrike, a cybersecurity company, phenomenal product. Their Falcon is like, one of the market leader. They're number one in a lot of charts that I know that technology industry, wants to have, right? So that's a great company. Shopify, is a kind of marketplace platform like Amazon, but it's Canadian company. I'm not big invested in Shopify. They have gone down a lot, but I think they have unique advantage with collaborations with other social platform. So they kind of, you can come to the Shopify from any different platform. It's very hard from the other platform to come to Amazon. You really have to go to Amazon.com or something like that. But Shopify is much more networked company in that sense. Similarly, Booking.com, right? So I don't want to really spend a lot of time on talking about all these companies who I have chose, but all of those things I have I'm showing here has this CAN SLIM stuff, right? New product, new services, good current earning, year to year a growth on annual earning, 20% or more, sales growth, like all of those things I notice, and that's how these companies are chosen. Plus, I think the unique thing about why these companies, not other companies, there are other great companies, but these companies is because something I'm familiar with this company. I know what they do, how people use their product, how people perceive their product, and why they want to pay more to this company's product and continue to purchase, right? So that information is also informing me that, invest in this company. So, okay. So that's about it. So again, the whole point is you do your own research, but you make sure that whether it's a stock trading or option trading, make sure the company has those characteristics of CAN SLIM. Now we can go back here and show you that quarterly earning, annual earning, new product and services, creating more, timing is right. You don't pay a lot of money when it's like really overbought, and people are like crazily buying this stock, pushing the price very high. You don't do that, right? And definitely look at the market directions. You don't want to buy when market is going down. You don't want to catch falling knife, right? So that's another thing. And do not go against the market. Do not go against the big brothers like institutions like Fidelity, Vanguard, and all those things, right? Follow their market trend and follow their investment, which is absolutely fantastic things to do. So with that, I'll stop here. But I would love to see what do you think about the good stocks, and what you are doing for your own research for finding a good stock to trade, whether it's option trading or stock trading. One thing to remember that option trading also, sometime let's say you do a sell a put, and you got assigned and you bought the stock, but the stock price is continuously going down, and you are stuck there. But at that time, if you would have invested in a very good stock, very good company, that eventually will come back to the price that you can sell a call and make money, right? So I will also go into details of covered selling, covered sell, selling put, and making money, or wheel strategy and all that details. But make sure that overall, no matter what strategy you apply, you have a good stock that will be going up, making money, continues to rise in their price and value. That's very important. That's the takeaway from this call today. So I would love to see how you do your analysis and research. Again, this is not a financial advisor. I'm not in a capacity of suggesting anything or recommending anything. I'm just sharing what I'm doing for my own research and what I follow when I do any kind of trading. And that's why you see all my videos as names like Apple, Google, or like ExxonMobil, or like something like that. So okay, thank you very much. I think I made my point. If you have any comment, please comment in the video. If you like my channel or see any benefit of it, feel free to subscribe. So thank you very much. I appreciate that. Have a nice rest of the day.